This is a stock market update. Back last Wednesday on FutureSpeak, we had talked about the likelihood of the market declining for a couple days, and the market went straight up. So when that happens, it's really a great opportunity because when things change in the market, it says to us, well, let's look at what changed. Let's look at what we need to look at to project forward and get the highest probabilities that we can. So that's why the cycle analysis is so good, because it encourages you to look at how money flows are changing, what could be going on that's changing, and then what I do is I update the chart, send it to our members. Now, it's unusual that I would do a complete full update looking at all of these on weekly and daily charts at this time. We reserve that for our membership. The only thing is that I didn't have really time to do anything so specific and so detailed since the revision on the analysis. So I just decided to put it in the free video here. But this is very, very rare that I would do that. So you're going to get another lesson in cycle analysis right now when I look at this. And also how cycles do shift and what we have to do when that happens. It's so important. No analysis is perfect, but one of the great things about cycle analysis is that it very quickly tells you that you need to do a revision, and that's what I do. So let's take a look here as we look at the S&P 500. So this is the side-by-side chart that we look at when we do our FutureSpeak show on Wednesday, where we look at a weekly chart and a daily chart, and we do cycle analysis on all of our weekly and daily and monthly charts when we do any analysis. Cycles are the core of our work. There are two other core aspects. One of them are the momentum conditions, which you can see on the weekly chart right over here on our reversal scout, and the daily chart right over here on the slim ribbon and the slim ribbon PO on the bottom. So that's what we do as far as the first two core aspects of the analysis. The third part is what we call swing high, swing low analysis, where we put in the resistance levels and the support levels, and we have now completely updated all of these for our members, which I'm sharing with you. So let's take a look first at the weekly S&P 500. So when I look at the cycle brackets on the bottom, the cycle brackets are simply the ideal. In other words, if there was a perfect rhythm in the market, a rally and a sell-off, a rally and a sell-off, and there's a dominant cycle and a minor cycle that you see in there. The dominant cycle is the dark blue, and the minor cycle is a dotted line that you see right in there. The regularity that you see here, and these yellow areas are points of correction right in here and here and here, is really good. This was very confusing because the decline was very small, 3.6%, which is extremely unusual. And if you look at these cycles right over here on the bottom, the ideal, and if you put an influence on them on the upside, which is we call the directional component, then the principle of summation, adding all of those things together, give you this perfect uptrend that you see right in here following these cycle rhythms. Now something happened, something changed in here in this last cycle, and that is, while these other rallies have been strong and then coming down and then hitting support and then bouncing back up, this one rallied, made a new high, and broke below the 78.6%. In fact, it challenged this last low over here. When that happens, the probability of moving to a new high in the next cycle drops sharply. The probability goes from 70, 75, 80% to making a new high, to when you break this low over here, getting down to less than 1 in 3. So about 30% chance of moving to a new high. This is certainly strong, but it's gotten into the resistance area. Were it to have broken this low right over here, the probability of going to a new high would be less than 10%. But it held above that low, broke the 78.6, and it really should stop somewhere in this resistance zone right here and not go to a new high. The odds of making it to that high again, as I said, are only about 30%, and it's done a good job so far getting up pretty strongly. Then the next bigger corrective period is out over here, as you could see in that projection. Even if the market was to manage up into a new high, this would still be a riskier period coming right out over there. So that's a look at the weekly in the S&P 500 SPX. So now when I switch over to the daily, what we put in here are called complex cycle structures, where it gives us some sense about the, again, the cycles and the what we call configurations or translations, which a positive configuration closes higher than it started, has a higher high, higher bottom, as you see right in here. And then what happens is that if it comes down and takes out the key low, it gives you a sense that the trend is changing and moving to the downside. In this case, all of the strong momentum, as you can see here in the slim ribbon PO and the positive signals, then turn negative in here. But now it has neutralized as it has this big upward move. So what happened in here was that this cycle right here, which normally have been running 21, 19, 23 days, 21 days, lengthened by the length of one full minor cycle to go out to 30 days. This is unusual, and it forces us to move the cycle out by that distance and use this anchor point for the next cycle structure right there, which is what we did. And we did the same thing on the Nasdaq. Well, we didn't do it. Essentially, the market told us to do it because of the changes in here. What that does is give us a new anchor point right over here and ways to do our swing high, swing low analysis to create the resistances. This blue area was the target zone off of the fib extensions. This is the intermediate resistances off the weekly chart right over here. So in other words, from this high to this low creates these resistances, just as I showed you on the weekly chart. This is the area that it should stop in. So this level right over here is 44.90. We would not expect it to get through there. Were it to get through there, it would raise the probabilities of getting to the all-time high, which of course is up here at 45.45. So right now, the highest probability is it stalls in this area and then turns down. But then you have these supports that are right in here right now, which are between this area of 43.95 and 43.50. So we would expect that we would get a pullback in here over this time frame. So what we looked for was the minor cycle to give you further decline right in here. But when the bigger rally comes here, it tells us only look for a couple day pullback. So this would suggest coming down into maybe Monday or Tuesday and then moving up again in this next minor cycle. And we have to see how far it can move up in there. And then the risks picking up again. So right over here around the area of 1020, we had the suggested minor low right over here. Well, because of the rally, that 1020 date doesn't change. It simply has a higher support area. Then you get another rally up, and then the next low projected somewhere around early November, and there's some variance in here of when that low could come. So it would be a decline early in the week, another rally, and then after that, the risks pick up again for another pullback. We would expect that area of around 44.90, 44.95 to hold it on the upside, and then for it to begin to pull back. So that's the update on the S&P 500. It's important to think about this timing and the fact that somewhere around early November, the market should be turning down into that time frame, because I'm going to show you the VIX in a second, which is important to the analysis also. So here is your Nasdaq with the same type of analysis on it. Nasdaq has a little bigger cycle that we have in there, and this was a 19-week low. Here's the minor low right over here, and because of the shift that we saw in the cycle, it confirmed this low on the S&P 500 on the Nasdaq as the minor low, and the likelihood that we were in that next minor rally. Again, look where this low is, and look at the fact that the Nasdaq broke the low. The probabilities of getting to a new high in the Nasdaq are 10% or less based on this analysis. It is very likely to fail right in this area and then set up what should be a much bigger decline out over here in December. Now, nobody thinks the market's going to go down November, December, except me. Based on the formations that I see right in here. Again, here is that extended rally, extended cycle right here, which moves out one minor cycle length. and then the new anchor point and the resistance level right in here. And because this broke the key levels, this is a sell zone right in here, and you can see it's gotten right into that right now. This also is a sell zone, and this is your intermediate fib extensions, your short-term fib extension, sorry, which it's coming up right to the bottom of that level right now. So we do not expect the Nasdaq to have a lot more upside in here. And if anything, this looks like the Nasdaq would be the weakest of all of the three indexes, as I'm going to show you. And if you were a pair trader, and especially using our stock index report live stream, you'd be looking for days where the Russell was stronger than the Nasdaq and doing that kind of an intraday pair trade. Again, here is that pattern right in here. We're looking at the negative momentum right at this right in here. We're looking here where the S&P 500 turned neutral momentum, that the momentum is still negative in the Nasdaq, so it shows you that it is weaker, and the likelihood is, based on the shape of these patterns, that there's going to be a minor decline into the beginning of the week, another attempted rally, and then another bigger decline out over here into the early part of November. So we would look for a pullback into this support area, which is under 14,850, down here to about 14,680. 14,850 to 14,680 would be the target for a pullback in here around into the beginning of November. So you can see clearly the Nasdaq is weaker than the Russell. Here is your Russell right in here, and I'm going to blow this up for you to see. This is amazing. The Russell has been in this range for 42 weeks. This whole year, it's been in this same range. Now, we saw the Russell strengthening in here as the momentum conditions have kept waffling, and now it's in a positive momentum condition. Here's your minor low right over here, your first or second week of this advance. And this has the greatest probability of taking out the all-time high. In other words, this low-cap zombie stock index is the one that looks the best right now, and the one that could move to new highs, where the other ones are not in anywhere near as strong a condition. So momentum strong in here, and the cycle patterns in here did not shift. They're exactly as they were, and you could see these complex cycle patterns just have been waffling back and forth within the same range. And now you can see we're way up here hitting this target zone, with the potential of making new highs here, even getting up to about 2360. So you can see that the way that projects much stronger, and we would expect, looking at this daily pattern, that there's a pullback here again into November, but this is later. This is about the second week of November right here, and this really could continue to remain the strongest of all. Now, it rallied right to there, and it's pulling back some today, gave up some ground, but now everything is pretty much dead in the water. But we would look for this to be the strongest index, and again, getting up potentially to new highs. You could see the positive pattern here, the positive pattern here, the positive pattern here, and that's these green arrows that show you that right there, that these configurations are positive and do suggest moving up. We told our members last week on FutureSpeak that even though we were looking for a brief couple of days to go down, that this really was looking like it was going to lead the way on the upside for the next rally, and that's certainly what happened. So we looked at the S&P 500, we looked at the Nasdaq, and we looked at the Russell. The Russell the strongest, the Nasdaq the weakest, and we would look for some significant pullback into early November in the Nasdaq, that being the weakest of all. But overall, these patterns in here are not really subject to big declines right now. They're in S&P 500 and the Nasdaq in resistance, but again, not looking for real big declines yet. As we showed in these patterns, really it's quite a number of weeks that they could hold up overall, outside of some brief pullbacks that the market looks like, while not projecting to new highs, still could hold up for a while. I want to look at the VIX because this is really important to the analysis. Remember that we said that the Nasdaq, the S&P 500 comes down into sometime around November 4th after a little bit more attempted upside. The Russell to somewhere around the 10th or so of November, where that's due to come down. But when we look here at the VIX, this is really very important, and that it's suggestive of the fact that And I'm going to blow this up, and these are really gorgeous cycle patterns that you can look at in here. These are the harmonic families right here, and when they're all nesting is when the VIX falls the most or the stock market rallies the most. You can see that. And that period ended right here. The green circles tell you the beginning of uprising phases, and these lines in here show you where all of that nesting goes on. So our members understand that. And what this shows you right now is that there's just another week or so of potential declining VIX before it begins to rise again. So we said the stock market likely to pull back a couple days and then rally again. That's likely going to give you this little pullback right there that we're looking for. And look at this daily chart right in here. I mean, this shows you the beauty of this cycle analysis right in here, where you had this declining structure going on in implied volatilities. And these areas where you see the gray areas are where all the nesting is, where the VIX falls the most, right over here, here, and right over here. After that, what happens? Well, then the VIX starts to jump up again. And what that says, in alignment with what we're talking about, is that sometime after about another week or a little bit more, you're likely to start getting implied volatilities moving up again. That is suggestive of what we're talking about, that you maybe get a rally in the stock market that goes into the end of next week. And then again, you start to get a pullback into November that could be, somewhat significant into those levels that we're talking about. So there is a window of time here on the VIX of about a week for implied volatilities to go lower. And then we're going to be looking for a jump up in the VIX in alignment with a pullback from the resistances that we showed you in the stock market indexes, and the potential for the VIX again to jump up to 24 to 26 sometime in November, based on what we see right over here. So that's a good look at the VIX and the beauty of the cycle analysis that you can see right in here as it follows those patterns in a beautiful way. Here on the weekly on the left, there on the daily on the right. And if you want to learn about that and learn about all the cycle analysis that we have shown in this video and in all of the Market Week show, it would serve you to take a look at our cycle analysis workshop special with 46% off right now that you can go see. Also, if you're just watching this on YouTube and not watching the whole show, you missed what I talked about early in the show, which is our popular services preview. You can see our very most popular services for 7 days free. All you have to do is sign up for that on the main page. It's down in the middle of the main page, and no credit card necessary. Just sign up for that. You're going to get a great peek at our analysis that we offer to our level 1, 2, and 3 members. Fantastic stuff that you'll get to see. Popular services preview.